Dear beloved viewers, welcome back. Before we took a short break, I was explaining about the mathematics, small mathematics, on determining net zakatable amount. I will repeat it for the sake of penetration. They say when you repeat something, you enable people to internalize, and it fits into their minds, among others. So the first thing you do when you want to determine your nisab is you look at your cash at hand and cash at bank. This is the first thing you have to look, how much cash you have, either in the bank or at hand. The second thing that you need to add to this cash is the value of stock. Your stock, the merchandise, or the raw materials, or the goods that are in transit, among others. You have to add what is considered as the goods that you have for selling, even if they are not yet at that shop, but these are already paid for. They are your mal, they are your properties. This is the second thing. A third thing that you need to add is your debtors. Debtors. These are either trade debtors, these are people you have given them your goods on credit, and you expect them to pay you in the next 12 months or in a very short period of time. As well as maybe cash debtors, those you gave them cash among your friends, among relatives, your neighbors, etc., etc. Somebody that you loaned him money. You will also have to include that. Then we said you will have to deduct, you have to minus current liabilities. And in current liabilities, okay, it might include, these are creditors. There could be trade creditors. This is maybe somebody, one of your supplier had given you his goods on credit. You haven't paid yet. During that zakatable period, there is a certain amount that is due to him. This is not your money, okay? And since it's not your money, you will have to deduct it from that total that you had obtained before. You minus trade creditors. Second, there could be a friend, a relative, who maybe gave you some cash as a loan. You'll also have to deduct that because it's not your money, it's his money. Okay, you have to minus that as well. Maybe you had borrowed, and here there could be two kinds of borrowings. Okay, one could be a Sharia compliant financing. You went to an Islamic bank and they financed you murabaha or other forms of financing, okay, that you are indebted to them. You have to pay them back in a year or 2 years or 3 years. In this first scenario, if the debt or the amount due to an Islamic bank, normally it includes the principal plus the profit. In this case, you add all these to the amount that is due without looking at what is principal, what is profit. The installment that are due for the next 12 months, you will deduct them, okay? But suppose you had an interest-bearing debt. You had borrowed in a conventional bank, they gave you money and you are to pay them principal plus interest. The first thing I'll tell you, you have to really repent before Allah subhanahu wa ta'ala. This is something you have to get rid of. You have to seek repentance repentance to Allah subhanahu wa ta'ala by getting rid out of this. But for whatever circumstance, maybe you don't have the cash, you don't have the assets to liquidate in order to get rid out of it, we're saying the Sharia position requires the only amount that you will deduct from the conventional loan is the principal only that is due. The interest is not deductible. Why? Because Sharia doesn't recognize interest as an expense, as a haq to that credit institution. Doesn't consider it that you should pay, neither consider that it is right to the credit institution to receive. Sharia doesn't consider interest as a right of the creditor. So you will only deduct principal, and you cannot deduct the interest in this particular case. So also you have to deduct arrears. Maybe you have an employee that you haven't paid him or her his salary. Or maybe he was saving with you. He used to take a small amount and the other he said, keep it for me. So you have to consider that as arrear, you have to deduct it as well. Also, if there are tax arrears, okay, there is an amount that you are supposed to pay to the government, but you haven't paid, then you will have to also deduct that amount. Then you get net amount. Now, after getting a net amount, we ask ourselves, is this net amount above nisab or is it below the nisab? So here the nisab, if it is a gold standard, it is the value of 85 grams of gold, which we said it is around 800,000. Okay? But if you were using silver standard, we said it is around 66,000 Kenya shillings. So if it has reached the nisab and above, then we say this becomes net zakatable amount, for which now we will apply our 2.5% if it is a Hijri calendar, or we will apply the 2.577% or 2.58 if our zakat period follows Miladiya calendar. Let me illustrate this point by the following steps. The first step, as to what I said, is you have to determine the amount of cash you have. You also have to determine the value of stock you have. You also have to determine the amount that is due to you, okay, that is debtors, okay, people that have to pay you, okay, these are debtors, you have to add them. And then we said you deduct current liabilities, okay, that I have mentioned. Then you get net amount, and then we look at whether the net amount has reached the nisab and calculate zakat on it. But there is one item which we need to discuss in detail, and this is valuation on the stock. What price do we use to value the merchandise in the shop? So here there are different categories of merchandise, and traders knows this very well. You have what is called a current stock. This is merchandise that are latest, that are on the market demand, and they're moving, they're current. So what is the price for you to value this type of stock? Is it cost price or is it market value? It is the current market price. you use the current market price. You don't use the cost price. So the price that you will base to value the current stock is the market price, or the price that you sell, your selling price. Then you might be having dead stock. These are items that are maybe, they're not moving, nobody asked for them, but they're still there and you're still having them, and you still want to sell, okay? But maybe the price, you have already reduced the price. So the value that you will use for dead stock is the current worth, the value of which they have at that moment, whether it is your selling price or if it is a specialized item, you had contracted a valuer, will value it and give you the price. And this is sometimes very important for example, those who are dealing with the land, in a land business, okay? They buy lands and sell it, and some of these lands become a dead stock. The land that has been staying for 3, 4, 5, 7, 10 years, that the guys, nobody's asking for that land. He has been advertising it. He wanted maybe $1 million, but nobody willing to pay for it. He announced it for 800,000, nobody's interested. He even announced 500,000, nobody's interested. Okay? Now you will value it to the current value that you have given to it, or you will have to, if it is a specialized item like land or other assets that are special in nature, and there are some professional valuers, will have to value it so that you get it its proper value for purpose of zakat calculation for that. Another stock is undelivered stock. This is the stock that you have paid for. Maybe it is in China, maybe it is in Germany, maybe UAE, maybe it is Turkey, okay? And you have paid, and the supplier, maybe he has already shipped it, it is on the way, coming. Now this stock is valued at the value for which they are. So it could be cost price, because you have paid cost, insurance, maybe, and freight. So the value will be based on that, because at that moment they don't have even that. You can't use the market value because they're not in the market. They're somewhere there. Okay, so you will use the value at which they are. And in the example I've given, it could be cost plus insurance plus freight, or cost and freight. Okay, the amount, the exact amount you have given out to that particular stock. Another category of stock, this is for manufacturers, okay, is a work in process, raw materials that you use to produce other things. And this is very important, particularly for restaurants. Restaurants have a lot of these raw materials. They have the wheat flour, they have the sugar, they have which they use to produce finished goods. So when it comes to valuation, they have to count how much they have in their stock of rice, sugar, maize, wheat, okay, which they use to produce other goods, okay, their raw materials. And the value for this would be the cost price, okay, how much they had paid for, because they are not selling rice itself, okay, they are selling cooked rice. So they will value whatever rice in stock, whatever wheat, whatever maize in stock, based on the price they had bought for. Then you have damaged stock. Okay, this one will be valued according to the price that you are willing to charge on them. This is a stock, maybe a cloth, but maybe the color has already started to change, or maybe it has some holes. It's damaged goods, okay, of which it doesn't attract the market value. So it is how much you are willing to dispense it for, and that will be the value for it. So this is how you should value your stock, okay, so that you can include it in your net business assets to determine their nisab level. So dear beloved viewers, you need to take note as I conclude that whatever you gain, whatever you had received as riba, for example, you had cash money, okay, as a business person, you used the bank, you had put money in a bank account and you generated interest. That interest is not purified by paying zakat. You have to get rid that. That all goes. You don't say I'd received maybe 10,000, okay, interest from my 1 million that I had kept in a bank account, and maybe think that you will add your 1 million plus your 10,000 and pay zakat of 2.5 and then everything is halal. No, not at all. You will have to take the whole 10,000 out and pay zakat on what is left, which is tayyib, which is good, 2.5 if it is Hijriya calendar that you are using. If at all also you had at some point played lottery, okay, these days we have so many sports betting, okay, if you get engaged and won a sports bet, the whole gains goes to charity. You have to give it to the poor and to the social, the poor and the needy and others community endeavors or initiatives without you benefiting anything out of it. All of it has to go. Okay, you don't purify illicit, haram wealth by giving zakat. Zakat doesn't purify haram wealth. Also, if you had mirath, you had exploited some of your brothers and sisters and took more than what is due, zakat doesn't purify that. Okay, so you have to give each of your family member his or her right share, and don't deceive or live in an elusive world thinking that you pay zakat and it becomes halal. It doesn't become halal. You have to give it to the rightful owners. And if you have stolen wealth, you had stolen some cash, or maybe you have stolen some of the goods, okay, somebody sold it to you, goods on credit, and maybe due to short memory or due to lack of proper records, the guy forgot how much he gave you, okay, and you concealed that. You didn't reveal how much exactly that you took from him. This is stealing, okay? You have stolen from him, okay? Paying zakat out of it doesn't purify it. So it's important for you to know that any illicit gain is not purified by you paying zakat. You have to treat it accordingly. Okay, whatever you stole, you have to take it back to the owner. Whatever you have inherited wrongly, you have to take it back to the rightful inheritors, etc., etc. So it is important for us to understand this fundamental principle with respect to our business, zakat. Dear beloved viewers, we have come to an end of this episode. Until we meet again, Assalamu alaikum wa rahmatullahi wa barakatuh.